Today I'm joined by Paul Griffiths, who's CEO at Predator Oil and Gas. How are you today, Paul?
I'm good. It's been a rainy day, though.
That's right. You came to market relatively recently with what seems to be a new offering, a relatively new offering in terms of this carbon dioxide enhanced oil recovery, which maybe followers of the oil and gas sector won't be that familiar with. Just a tiny explanation of that?
Well, it's quite a complex subject, as you can appreciate, but trying to put it into simplistic terms, you inject CO2 into existing oil wells. It increases the mobility of oil and allows you to produce the oil at a higher rate than most conventional methods in older oil fields. It's not new. It's been used in the United States for many years. But the reason why it's not used, say, over Europe and other parts of the world is the cost of capturing the CO2. In the United States and in Trinidad, you have a very cheap source of CO2, and that makes all the difference to the commercial terms.
So is that why Trinidad is so different from other countries, other
Absolutely.
areas in the Caribbean?
You know, you may get this impression that Trinidad is a typical Caribbean holiday island. It's not. It has 11 ammonia plants. It has iron and steel industry. It has a large amount of industrial development, and it's this that creates the CO2, which is currently just vented into the atmosphere.
And you have an exclusive agreement there with the only supplier of CO2?
Yes, absolutely. That was the first priority for us. We engineered a deal with the only CO2 supplier in Trinidad, who currently supplies to the food industry. It's 99% pure CO2, so that we had exclusivity to use their entire CO2 supply. That means that we're then in the preeminent position to effectively control CO2 enhanced oil recovery in Trinidad and beyond, because there's no other CO2 supplier in the Caribbean region.
Right, as well as Trinidad, you have the logical other place that one would expect you to be operating, which is in Ireland. Why is that so exciting? Well, in fact, why Ireland, and why is that so exciting for you?
Well, I always say to people as a starting point, Ireland has one of the longest coastlines in the whole of northwest Europe, yet it's one of the least explored coastlines for oil and gas. So that makes it attractive from the point of view of new opportunities, say, in northwest Europe. But what's happened very recently is last week there was the Energy Institute dinner and the Atlantic Ireland Conference in Ireland. And for the first time, the Minister of State responsible for our sector, oil and gas, praised the future of oil and gas and its contribution to the energy supply in Ireland. And you have to put that in perspective. Over the last 2 years, there's been only a focus on renewable energy, green energy, and quite rightly, but at the expense of oil and gas. So for the first time for 2 years, the minister stated that oil and gas was essential to the energy supply and the security of supply of energy to Ireland. Now, we said that as Predator back in 2016. We published something in the newspapers in Ireland in 2016 stating all this. So it's very comforting from my point of view. After 2-3 years, the story now revolves around what we set out to achieve and our highlight way back in 2016. So from our point of view, as again, we established a license situation then, offshore Ireland, close to the infrastructure of Corrib gas field in Kinsale, primarily to exploit what we saw would be the insecurity of security of gas supply, which would face Ireland in 2 or 3 years' time.
And what are the magnitudes? What's the magnitude of resource there? What's the size?
Shell gas field is over just about a TCF of gas recoverable, and recently it was sold. End of last year, it was sold to the Canadian Pension Fund for over €1 billion. That deal is awaiting final approval by the minister, which hopefully will be before the end of this year. We have a license adjoining the Corrib gas field. And in that license, there's a prospect where our CPR gives a range of resources up to a maximum of just under a TCF of gas in the maximum case, in the P10 case. So obviously, in the limited case of maybe the P90 case, it's a simple tieback to the Corrib gas field, which has spare capacity to take our gas. In the upside case, it potentially is another Corrib. So it's exploration, but it's low-risk exploration. The geology is known and understood, but most importantly, the commercial model is very simple. A tieback 18 kilometres to the Corrib gas field, something that industry at large understands and knows about in the North Sea, for example, And here's a situation in Ireland which the industry and our potential partners, our potential future partners, clearly understand the commercial model.
It sounds like, I mean, you could be not a small player, but a medium-sized player in your sector at some time in the next few years, let's say. Market cap currently only 7 million. There seems a bit of a gap there between the future and the present.
Well, I'll digress slightly. Where you say we had the potential, you say we might have the potential to become a mid-cap company. It has always been in my DNA to build significant companies. I built Ireland Oil and Gas from nothing, and at one stage we bid for the Kinsale facilities from Marathon, and we bid $220 million. We were unsuccessful, I'm afraid to say. I helped build Fastnet and the Tendrara project in Morocco, which was then Sound Energy picked up after Fastnet exited the oil and gas business, and Sound Energy added a significant amount to their market cap as a result. So always we're trying to build that kind of opportunity, that kind of size of prize, if you like, because we're geologists as a board, we're also commercial people, and we're also financial people. So we understand what it takes to build a successful oil and gas minnow, if you like, that becomes something larger. And remember, Steve Staley is on our board, and Steve was a director of Cove Energy, which is a story in itself. So going back to your point about the market cap, I deliberately set the market cap low on IPO at 2.8 million sterling. Management owned 55% of the company. So by setting it low, you create the opportunity for share growth. If you set it too high, then the opportunity for significant upside in the share value is limited because you've already factored in a large value to the company on the IPO. So we set it low. It's now 7 million, which is over 2 times what it was 4 or 5 months ago. But we still have the flow of projects coming through. We still have the opportunities coming through. So the potential to grow that market cap significantly by multiples is there if the projects are successful. So the point is, the market cap is irrelevant at the IPO. It's where you're going. And we still own 55% of the company. We believe in our projects. And that's the reason why we have selected these projects for future growth.
Paul Griffiths, CEO at Predator Oil and Gas, thank you very much indeed.
Thank you.